For that, Srishti, now let's bring on board our guests, chat a bit about all of that. Rudramurthy, BV, founder, director at Vachana Investments, joining us. Also, Dipan Mehta, director, Elixir Equities, joining us this morning. Great having both of you. Dipan, let me come to you first. Let me take a view with regards to that IT pack. We spoke about it. You were there when we spoke about it. What's the sense like? Some bit of zing expected on some of the IT counters today, and is there more positivity anticipated in coming months where IT is concerned, given the possibility of rate cuts by the Fed as well?
Good morning, and thank you for having me on your show. I think IT is one of selectivity, and we've seen the results so far which have come through from TCS and HCL Tech and even Tech Mahindra, and you've seen the result which has come from Persistent Systems. So there are, like, for every 10 IT companies which are in flat or stagnant mode, there are perhaps one company which is an outlier, which is an outperformer, and certainly Persistent Systems is one of them. It reflects in the valuation as well. TCS goes at 21 times, Persistent at 50 times. So one has to be extremely selective when it comes to software companies. By and large, unless the software company does not have any specific positioning, strength in any particular vertical, client concentration, some of the softer aspects, unless those are not in place, I doubt the software company can grow at even a mid-single digit.
Oh, we seem to have snapped that line. Just going to get back to Dipan in a second. Let's also talk about, what else has been happening in the markets. Rudra, hi, morning. What's the setup looking like for you? Does it seem like it's going to be a range-bound Nifty for the better time to come?
Aisha, good morning. Thanks for having me in the show. I'm very positive on market in spite of yesterday's volatile move. 25,000 to 25,050 is very strongly held by Nifty. If you see, the move started from 24,600 and we went up to those levels closer to that 25,300, 25,350, and we are seeing some small correction for last 2 days. I am very, very bullish on market. If you see, fundamentally, business updates are far better than last quarter. Earnings which have come till now have not disappointed in overall compared to what it was last quarter. Crude oil prices at last 4 months low, and everything is very, very positive. Yes, FIIs will slowly turn buyers, and we need a strong trigger which can come because of good earnings from either private banks or even, for that matter, any other larger company, which will make FIIs to cover their short. Bank Nifty is already headed towards its all-time high, and yes, Nifty is just lagging behind because of might be IT and few other non-performers in the index. So overall, I am very, very positive on market till Nifty is above 25,000 to 25,050 zone, and Bank Nifty above 56,200. It is very, very positive. Every dip has to be used as buying opportunity, and markets will be very sector specific and stock specific. I like PSU banks. OMCs will do very, very good. Metals are shining. So these are all some of the pockets where a lot of good opportunity to buy are available in this market.
And Rudra, view with regard to IT that likely to be the flavor of today, and trying to get a sense of what you're anticipating in terms of moves. Rudra, that's for you.
Yeah, so what happens with IT is, no doubt, yes, yesterday's results from Tech Mahindra are better, and it has been a laggard for a long time. So if someone has a time horizon of at least 1 to 2 years, then pick IT, and yes, valuation comfort is definitely there. And I like in IT Coforge and Tech Mahindra. These are my two top bets. But if you are a very short-term trader looking for momentum, that is yet to come in IT. However, if your time horizon is bit longer, then be very choosy and pick stocks which are really relatively stronger. And yes, in that I will pick Tech Mahindra and Coforge for IT. But for short-term momentum, I will definitely avoid IT. Look for either OMCs or even PSU banks, which I was mentioning. Metals can do very good. Or even, for that matter, platform and new age stocks are doing very, very good. Whether it is Paytm, Swiggy, Zomato. So you have a lot of choice to make when it comes to short-term momentum kind of a trading. But if you have a longer horizon, then only pick IT and be very choosy in that IT pack.
Kunal, Hyundai, Tech Mahindra and persistent. Did you get a chance to look at LG yesterday? I mean, it's a one-day trade, but does it give you any kind of trend for you?
Sajid, very difficult. One day of
Zero
chart
history.
Zero history. In this
Zero
case.
history.
For 48% up. I was looking at the data actually. 8,000 crores of delivery stacks, which is 7% of the equity, and the company came out with 15% of the equity in IPO. So half of that got delivered yesterday, and with 4.5% equity in anchor lock-in, it's just 3.5% of free float which is now available in the market, which will lead to a liquidity squeeze, which will happen if there is further demand which is coming in. So,
but let's go across to Dipan. Dipan, your view with regard to an LG new product launch specifically for India. That's the other piece that they announced. Very, very strong listing. Largely 1,700 to 1,800 were the target prices, which most brokerages had. Pretty much very close to that. How do you view this one now?
No, I think that given that there's a lot of momentum behind consumer sales and LG being the largest consumer appliance company, it should trade at premium valuations. And even at these levels, it is at a discount to some of the other companies like, say, Voltas or even a Blue Star. So very positive on LG Electronics. And the GST cut certainly will benefit them, and that will be reflected in the September and December quarter numbers as well. I think that this stock has some more leg up, and the pop which we have seen in the IPO listing may gather even more momentum over the next few trading sessions or so. So very positive on this company, and the fact that such blue chip companies with great track record are getting listed just provides all the more choice to investors.
Okay, that's that on LG. Caught everyone's fancy, and I think the kind of frenzy around it, I don't think it's going to cool off anytime soon. Or for that matter, there will be any stock available for those who did not get subscription in the IPO to even buy into that stock. But let's talk about IT, and that's been the trend. Dipan, changed your thoughts on IT, looking at how the recent numbers have been, or still not?
Well, I think there's nothing enthusiastic about the numbers which have come, whether it's TCS, HCL Tech or Tech Mahindra. At the revenue levels, that's extremely slow, almost flat revenues. And these companies really cannot create value if they're growing at sub 5%. For stock to be of investment grade, you need 15%, 12-15% top line growth, which is not happening in large number of IT companies. When that will change, I can't say. But I'll tell you one thing, that it is a subdued sector and you could have a trading rally at any point of time. But I would view such trading rallies as exit opportunities. There could be a few outliers, like very impressive Persistent Systems numbers. And there are certain new generation, I would say different companies, different business model, like NewGen is there, Orion Pro is there, the Synthesis is there. I think those companies may grow far better than some of the traditional IT software companies.
Okay. Rudra, if I can come to you with regard to some of those insurance counters, ICICI Lombard, ICICI Pru, those were the other ones which declared numbers. Give us a sense. We've seen a bit of a stagnation in the space, in the sector. Do you believe that this sector could be ripe for a breakout, if at all?
See, for me, most of these charts, if I see either ICICI Lombard, HDFC Life, SBI Life, these are all stocks which are just consolidating without any major move on the upside. There is momentum which is definitely lagging. So if I have to specifically comment, look at charts of LIC, SBI Life, HDFC Life, all these things for last 6 months are definitely range bound. So for me, the better one to pick among this lot will be definitely HDFC Life as well as SBI Life if you want to pick from this sector, or else I will definitely avoid this sector in general. Look at either PSU banks or look at even for that matter NBFCs, where relatively more strength is there compared to that of insurance stocks.
Two insurance companies came out, yes. ICICI Life and ICICI Lombard. Yeah. How do you look at those numbers?
So ICICI Pru came out yesterday itself. So we had a reaction on the stock. It was up 1% or so yesterday. Growth was really muted. There was no surprise per se. But just given valuations, I believe what analysts seem to be suggesting is that there is upside just purely based on the valuation comfort that ICICI Pru offers. That was my read through with regard to all of this. Lombard, on the other hand, the losses in the catastrophe segment actually weighed down on the combined ratio. That's my understanding.
Because of the floods which came in.
Yes, that's correct. And due to that, your combined was lower. You had loss ratios which were slightly more elevated, which has pressured the numbers. Growth is absent. There is some bit of optimism with regard to growth on the motor side because auto has done ever so well over the last maybe 20 odd days.
Yeah.
So motor is coming back to the fore, and there is a view that's coming through that probably given the fact that there's such good auto sales numbers, motor may actually do much better. But Dipan, do you have a view with regard to some of these insurance companies? Give us a sense. How are you looking at it?
No, I think that first of all, they're a complicated business to first of all track and difficult to understand and connect all the dots. Like ICICI Lombard, if you see the management commentary, the combined ratio is higher. They have grown less than the industry averages, and yet the net profit is up. So obviously there is something which is happening on their portfolio investments, which has resulted in higher net profit. And on the whole, I think insurance companies, by and large, I think they are steady performers. They are defensive companies. It's not that they are actually quite cheap compared to global averages. And end of the day, I think there are some challenges when it comes to GST, although they have got a cut over there. How actually it's going to play out, one needs to really see. So I'm neutral when it comes to insurance companies, and it's a highly regulated sector, very little scope for innovation as well. I think that there are better plays within the fintech or financial services play than perhaps insurance companies.
Okay, just looking at the market construct from yesterday, it was the breadth of the market actually which really pinched yesterday more than the Nifty, which was once again range bound. And some of the metal names, they cooled off quite a fair bit. Asian Paints, Nestle, your consumption in as well did not participate. And as was the case with, most of the frontline large cap names as well, with a fair amount of weightage on the index, they all were down. And of course, Tata Motors, don't be fooled by that 40% cut. That was just an adjustment post the demerger. Bajaj Finance as well, which was lower by about almost 2% or so. Kunal, wanted to understand about metals, because that's been one of the leadership sectors of late that one has seen. Do these dips, such as yesterday, are they buying opportunities, or do you think it can crack further?
So I look at it this way, Isha, that the rally for the metal index happened when the dollar index started to go into a reversal mode or a corrective mode. So I think from 104, 103 levels 3-4 months back, we've seen the dollar index gradually inching lower. I think we made a low of 96 or 97 thereabouts on the dollar index, and now we are bouncing back to the 99 mark. Now, till the time the trend for the dollar index is on the downside, you're bound to see the metal index, the trends being sustaining. What we've seen in the last couple of days, might bit of corrections coming by. But then largely when we look at this trend over the last 2 months, 3 months and 6 months period, we've seen that many of these metal stocks have come back very strongly. Now, the only concern over here, or rather the bigger concern over here for the metal stocks, is that whenever the correction happens, because of their high beta nature, the correction, the intensity or the severity of the correction is far bigger as compared to maybe any other moderate beta sector. So that's the only concern for stocks like the metal pack. But I strongly believe that Tata Steel, you've seen SAIL, Hindalco, Jindal Steel, I think many of these stocks are looking very strong on their medium-term charts, and I would use substantial dips as a very good point where I think one should look to accumulate or even add.
Rudra, have you looked at SKF India? There's a demerger happening today, recorded today, 2 companies, 1:1. What's your view on both the businesses after the demerger?
See, if I look at purely on chart, SKF India is now breaking out of those levels at around 5,000 zone. So close above 5,000, which it saw yesterday, and the price action with volumes, what we have seen, that is definitely looking good. So purely based on chart, yes, as it trades above 5,000, it looks positive to me.
Your view on SKF demerger? Dipan, hi, Sajid here. Your view on SKF India demerger?
Yes, Sajid, sorry, I don't track that company, so I wouldn't want to comment on it.
Okay. Kunal, the demerger is happening today, effective, so there will be a split and a special session which will happen for SKF India. Do you have any views on SKF India?
So I think the stock is a little illiquid. I think because the liquidity is very inconsistent. Sometimes you see volumes trading into lakhs, but then on an average the volumes have dropped down. But I think it's a decent chart over the last, I think from the March-April lows, the stock has done reasonably well from 3,600 levels to now 5,000 plus mark. So in that sense, it's recovered more than 40% from the major swing lows. And the way the stock was approaching this news flow was also in a very positive or a consistent manner. I think in that sense, I would probably expect that the stock post a demerger, I think should continue to find favors for traders as well as investors.
Bunch of other names which are going to be in focus this morning, barring of course, Persistent and Tech Mahindra. This Thyrocare as well. They've delivered a strong Q2 and their margins have seen a jump up of about almost 572 basis points. The profit, in fact, has soared a good 80%. So that's going to be definitely one dhamaka earnings that we're going to be looking at for. And Kolte Patil as well. The Q2 update has been strong. They've seen a sales growth of about 9% on a sequential basis, standing at about 670 odd crore rupees. That's going to be the other one that we're also going to be looking out for. And then, of course, some order wins for the Sattvic Green Energy, Mishra Dhatu Nigam, etc. These are all names which are looking good. But Dipan, in the year gone by, or year to date rather, it's the hospital names which have done very well. You think the same trade could play out for diagnostic names? Although there too, selectively, one is seeing stocks do very well.
You're right, Aisha. I think that after many quarters, last 2-3 quarters, all the diagnostic companies have reported very good numbers. Metropolis, Dr. Lal, and now we have seen Thyrocare as well. First of all, I think it's a bit of a cycle. Secondly, I think consolidation certainly has helped the industry. And end of the day, I think healthcare spends are on a secular upswing. And especially, doing various types of tests have become the absolute norm. And also these companies, diagnostic companies, they're expanding deeper and deeper into tier 2, tier 3. And also a lot of acquisitions have been done by these companies over the last few years or so, which are paying off. So very positive on the entire sector. I would say that the diagnostic companies have a better scope to scale up than some other hospitals, which is a capital intensive business. So within the healthcare industry and that investment theme, I think diagnostics certainly, I think one should be overweight on. They've always traded at premium multiples, and that's going to perhaps continue into the future as well.
Okay. Sign DLM was the other one which came out with numbers. It looked extremely weak at the outset, frankly, the numbers. Both, so sequentially, we saw a bit of an uptick with regard to top line. But really the fall hasn't, or rather the recovery hasn't really been as good as one would have penciled in, because Q1 was a soft quarter. Management had reasons why Q1 was a soft quarter. Q2 also on a YOY basis doesn't look all that good. So Sign DLM will be the other one in focus. In terms of one more key stock, Keystone, promoters doing an OFS, and therefore you might see that one also in focus. Kunal, do you have a view with regard to a Keystone?
Not really. I don't track the stock very closely, so I'll probably give it a voice.
Rudra, Keystone for you, would this be a stock you track? And okay, let me widen this. Would you like anything within real estate?
See, for me, definitely Keystone at current levels I will avoid, and a clear no to Keystone. And if I have to pick stock from real estate, yes, look at either Kolte Patil or even for that matter, look at Godrej Property. They look better for me. And for me, sector like IT, real estate, all this I will avoid for very short term kind of a trader or someone looking for momentum. So IT is definitely a stock where you have now valuation comfort in that sector, and you have to buy only if you have a 1 to 2 year kind of a minimum time horizon. But for short term, these are all sectors which I will avoid, and you have lot better ones like either the new age or platform stocks, or look at PSU banks, look at OMCs because crude oil prices have come down. Look at metals for that matter, and yesterday's correction is definitely a buying opportunity to me. So you have a lot of these choices to make. Why to go for laggard sector like either real estate or for that matter IT.
Okay, makes sense. So Rudra, let's have your mid-cap ideas.
See, for me from mid-cap, CRM looks very, very strong. Stock has very strong support at levels closer to 700. And at 720 current market price, CRM looks very, very strong to me. Looking at target of 800 with a stop loss of 690, a risk reward of 1:10.